Welcome to this week's Nebraska Soybean Board Weekly Market Roundup. It's being brought to you by Nebraska soybean farmers and their checkoff. I'm Susan Littlefield. We are headed into a Thanksgiving holiday weekend. We're going to talk about a variety of different things today, including the higher cash that we saw in the cattle this week. What's consumer spending like, and how is all of the factors of the grain market affecting our livestock? From a grain perspective, what are some of the main factors that influence the markets this week? And what about China? Are we going to see some increased imports with them as we get ready to wrap up 2021?
It may be small, but this little bean fuels a lot of power. It powers a food industry as a top source of protein. It's a fuel that powers diesel engines with fewer emissions. It powers a state economy and bottom lines. And it powers the rest of the world as a top Nebraska export. Yeah, it may be small, but we're finding more ways for this little bean to power Nebraska.
Well, joining me on the screen today is two gentlemen that you can see. Jeff Peterson, he is with Heartland Farm Partners, and Kyle Bumsted with Allendale. And gentlemen, first of all, happy Thanksgiving to you and your family, and hopefully you guys got your fill of some great meals.
Yeah, it was great Thanksgiving, and thank you, Susan, for the warm wishes. So it's a great time of year to feel thankful.
You bet. Thanks, Susan.
Well, let's take a look. Let's kind of dive in for some of the factors that we've seen influencing the markets. And Jeff, I'm going to start with you to kind of get your thoughts on what we saw in the grain complex.
You know, it's been an interesting week of trade. The big question out there is definitely, is China going to come in? Are they going to pick up and buy some more soybeans? And we'll talk more about that as we go further along. We also got to keep an eye on South American weather and how that crop is getting off to the start that it is, which so far has been a very good start. And then we also have to have a discussion about where is the strength in this wheat complex coming from, and what impacts that having on the corn market. So those are some of the things that we're going to be touching on, Susan.
Kyle, what about for you? What are some influence that you saw? And we'll go more in depth, obviously, but what did you see in this livestock complex?
Well, the livestock complex, 2 weeks ago, we're trading 125, 126, 127 cash. And now all of a sudden there's confirmed 140s this afternoon, just a couple weeks later. So definitely a cash rally here in the, live cattle complex in a 2-week time frame leading into the holiday season too.
All right, Jeff, we're going to jump off with these grain complex in China. We did have a listener/viewer who was really wondering about doing some marketing in this last little bit, wondering if China was going to maybe sneak back in to finish up their phase one thoughts.
Well, that's what everybody's really kind of sitting at the edge of their seat on as we dig into the numbers. The one number a lot of people are looking at is those export inspections. And really, if we look at it so far, if we go back to the beginning of the crop year in September, we're down about 9.5% is what USDA thinks we're going to be down from the export side overall. But our shipment pace, we're actually down about 26.9%. Now, when we dig a little deeper and we take also those outstanding sales into play, it puts us down about, the latest number I have is down 32% on the sales side. So overall, what has to happen here is we do have to see China come in. And it's interesting when we go all the way back to January and look at what these shipments going to China has been from all sources, they're only down about 5%. So what it sure feels like is that because of the big crop that came out of South America and then the big crop that Brazil had, they were able to go ahead and buy up more beans. It's not that they aren't going to ship the bushels that they sure are from the U.S., but ultimately what it sure feels like is that they're going to take the least amount that they can in here from the U.S. and be able to try to get into those cheaper beans coming out of South America. And I think what they're looking at is that if for some region Argentina had any weather problems, then what they could do is they could come back to the U.S. and buy some U.S. beans if they have to, but they know those will be a little bit more expensive. And the reason they feel comfortable doing that is because we do have enough beans here in the U.S., Susan.
Well, I heard that looking at the forecast coming up the month of December, it is talking a little bit of drier weather for South America. Do you think that'll put some stresses?
Yeah, it sure will. And if we dig in there and look at that, you've got Argentina that's only about 29% planted, and that's normal for right now, but actually Brazil's off to a really good pace. They're about 86% planted on the soybean side, 91% planted on the corn side, but there is some dryness showing up. There is some rains coming in for Argentina later into this weekend, but overall Argentina does need more rain. Rio Grande do Sul in Brazil also does need more rain. So even in Brazil, there's probably 20% of that crop ground that does need some more rain at this time. So as we roll into December, we're going to have to watch that weather very close, because there are some chances, especially since we're in the La Nina, that we could have some weather events happen in Argentina. And the big thing about Argentina, they're the number one exporter of soybean meal, and they're the number one exporter of soybean oil. So those are two big factors we're going to be keeping an eye on.
So, Kyle, I'm interested. China has always and has continued to have an appetite for U.S. proteins. Are we going to see an uptick in their desires for beef and pork?
Well, I think there's a strong possibility. We have seen them here in recent weeks. They have been big buyers of U.S. Beef and pork, and we have been shipping beef and pork there. But they have the Olympics this year, so I think last time when they had the Olympics, they were major buyers of pork, and I think that beef is really getting on their palate. I mean, their middle class is the population of the middle class over there is huge, and I think that they've got an appetite for good protein, and I think beef falls into that category. So I do look for beef exports to pick up going to China moving forward here.
Well, it'll be good news for our producers, and hopefully we can keep that momentum going.
That is correct.
So, Jeff, looking at the dollar and the way we've seen the dollar influence, do you think that might cause some concerns, though, with China and other countries saying, wait a second, you guys are getting too expensive for us?
Yeah, that's always a concern, and the thing we have to always take a look at is that the US dollar index is made up of a number, about 7 different currencies, and it's heavily weighted against the euro. So the thing we always have to dig through is we always have to dig in and say, okay, how does the current dollar and the strength of the dollar, how does that compare to either our competitors or also compare to ultimately individuals, countries that are importing? So as you take a look at the soybean side, it's not really as big a factor, has a bigger chance to be a factor on I'd say the wheat side than the soybean side, and not as big a factor probably necessarily on the corn side than what we see compared to the wheat. So it's something we'll watch, but it's not probably necessarily the major driver at this time.
Well, until the Wednesday trade, this wheat market has been strong. What's been some of the driving factors for them?
I think it's been very interesting to see how that wheat trade has taken off. If we go back all the way to November 11th, and we would look at, or go back to November 8th, for instance, Susan, and take a look at where this market's been. We're up probably 75, 80 cents on the wheat side. And what's interesting is that's mainly being driven not out of the U.S., but actually out of some of the world trade. We know we've got a tightness of wheat. It's not that we're going to run out of wheat here in the U.S., but there is a tightness. But as we look over at the Paris milling wheat coming out of Europe, it went ahead and set overnight another record high mark on that contract. We're also seeing some higher prices coming out of the Black Sea. And really what's driving that is we've got some dryness in Ukraine, got some dryness in southern Russia, kind of southwest corner in the western part of Russia. And also the other big surprise that's happening is actually coming out of Australia. Now, Australia looked like they're going to have a really good wheat crop. But the problem that's happening in here is that actually they're just getting too much rain, and they've got more rain in the forecast. It was looking like they'd have 30 million metric tons of wheat coming to the market, and they're right in amongst their harvest. But because of the amount of rains, what's happening is we're seeing more sprout damage. So as a result, the milling quality wheat just isn't there in what the trade is looking for. So that's caused the market to go ahead and take off, just kind of a tightness out there in the world milling wheat. Then we come back in the U.S., and actually our news here hasn't been great either. In the crop progress numbers that came out on Monday, if we take a look at the crop condition, take a look at the good to excellent rating, the poor, the very poor numbers for the winter wheat crop, and we put that into an index, it actually would be the second lowest that we've had going all the way back to 1986. So there's some problems in getting this crop off to a good start, the wheat side here in the U.S. and also across the world. And in the U.S. here, some of our biggest problem areas, South Dakota, they've had some dryness as we've got that crop in, hasn't allowed that crop to rate as well. We also reach out to the Pacific Northwest, so they've got some issues going up there. So the crop condition just is not as well up there either. So those are a few things that are driving that wheat market. That strength is spilling over and giving some support to corn. It's great when we have the wheat market moving higher, because overall, as we go across the world, what that means is we've got higher prices for the feed wheat. And as a result of having those higher prices for the feed wheat side, that gets a better chance of maybe taking some wheat out of the ration and putting some corn in as we move across the world.
All right, Kyle, we got to look at some exciting news, and that's this cattle market. Hearing some 140 bids on a Wednesday. Let's keep this momentum going for cattle producers.
Well, yeah, Susan, let's do that. 140 actually did trade here today. It traded in eastern Nebraska, and there's rumors, non-confirmed rumors of a regional down in Kansas paying a little bit more on certain program cattle. So, a lot of those program type cattle are shipped overseas, Japan, China, and some of those programs, that they like to drug freeze and things like that. But interesting look at the futures today with this February live cattle board trading up here to 140.87. I mean, you're getting back into areas we haven't seen since the end of April in 2017, and even April of or March of 2016. I mean, it's taken out. It's made a statement here, taking out and making new highs this late in the year, and that definitely says that there was. I mean, from the looks of it today, the December, there was definitely some short covering coming in here of guys that moved the actual physical cattle. There was basically a short squeeze. And so that looks good. And it is finally starting to get led by the cash market. So seeing this $10, $12, $13 move here in the cash that we've seen here the last 3 weeks, it looks really good. And it makes more sense now with the futures making that move. The spreads are starting to tighten up, and it is starting to look more of a bullish formation to the cattle complex. And when you look at the numbers and what we've been run through here for cull cows and cow slaughter, yeah, we should be starting to work higher here because there is going to be less cattle or less beef coming at us here later this year.
Lots of things that we're looking at real fast. Consumer spending, Kyle, is that going to be something that's going to continue to weigh in?
Well, right now the meat markets are pricing in the fact or the thought that the consumer is going to continue to keep buying and keep buying product and keep buying beef and keep buying pork, and it looks good. But when you go to the meat counter and you look at the price, you got to step back and look at it. It is not cheap to buy meat. It is not cheap to buy beef.
Well, thanks so much to both of you for joining us this week. Then this has been the Nebraska Soybean Board Weekly Market Roundup, being brought to you by Nebraska soybean farmers and their checkoff. Reminder that commodity futures and options do involve a substantial risk of loss, and they're not suitable to all investors. I'm Susan Littlefield.